Well, I'm going to pause here because I'm really excited to add in my buddy here. There he is. We see the back of his head. No. What's up, man? I was
Hey,
telling
what's up, buddy?
everybody, thank you for joining us. I was telling everybody that I was hoping you can make it. I know it's really crazy. I know it's really wild. So we only have it we only have you for a few minutes. But for those of you who don't know, which I can't imagine no one knows, but this is Noel Smith from Convex Asset Management. How you doing?
I'm doing
Nope.
okay.
I
Actually,
hear that.
not to brag, but we're having a green day here at our business. So it's modest. So I'm not hooting, but I'm glad that it's not very red.
I think most people would take a update today. So, kudos to you on that. Thanks again for joining us. You are a volatility practitioner, a specialist, right? So we're really fortunate to have you join us today. Just break it down for us if you can. I've been talking for a few minutes here, and so I just love your view on what's happening, and we will see exactly if my view lines up or not. I might have to take an L on my view, so let's see what you got.
So what's my view? The interesting thing, the juxtaposition of yesterday's non-reactive move relative to today's, especially the violence in the overnight move. If I had to guess, it's like, one of those things you learn as a floor trader, and I was a floor trader a million years ago. When a guy gets carried out in a body bag, this kind of feels like that to me, where you're getting some forced liquidations. You're getting somebody that knows that what they're doing is very difficult, but they have to do it anyway. Otherwise, you don't see that kind of overnight stuff where the markets are so thin and so uneconomic. And clearing firms don't care. If anybody's ever been forced liquidated, the clearing firm is absolutely merciless as to what fills you get. They would just say, okay, fine, whatever. It is what it is. You got to get out of this right now, and that's what it feels like.
Yeah, in the situation of that too is, and unfortunately, that's kind of what my take was this morning, was that there's this capitulation, sort of forced liquidation. My experience on the buy side taught me that the clearing firms will change the rules of the game in these situations as well, right? So you think your
Yes.
margin rate is X, and then all of a sudden it's X plus this, right? And you learn that they hit this point where they just go, we're de-risking. It doesn't really matter what you do or what you say. We don't want this type of position on our books, so you can't make us happy no matter what. Get out of this. And so, that was my big experience from the August 2015 crash that was there, right? So it's an unstable rules book, rule book, I should say.
Yes, and it hits you at the worst time, especially in the commodity space. And I know that you're not a commodity guy, but if your margin requirement on gold or hogs or whatever is X, and then it goes to 3X, it just completely changes all the math on your risk.
Yeah, fascinating stuff. To watch that from the outside, it's not fun to be on that on the inside when those rules are changing. But this is also what happened in the August 2024 crash, right? There was this rumors of the yen carry trade covering and all that, and that's kind of what brought VIX to 60. Well, marked over 60. I know a lot of the vol nerds out there will say the VIX didn't actually trade at that level, so I'm hedging with my statement there. But that was also kind of like the same capitulatory move, right? If I read that correctly.
Well, it was,
Yeah.
because I've been around, I know people in the business. So, you don't really have to speculate that there was some forced capitulation at that time. And, people lost billions, and I knew a couple funds that blew out, and they're otherwise good funds. But so, I guess I'll verify for you that is the case in August, not today.
Yeah, yeah. So I think what I want to sort of turn to, if I could, obviously the vol, market vols have been jumping a lot. S&P's down on 20% now in the last month. What are what is it that traders should be looking for as thinking about when markets may possibly bottom? I'm not trying to make you forecast when this has happened, but what are some of the signals that you would look at in the market to say, okay, maybe this capitulatory move is ending a little bit. Maybe we should get, and I'm not talking about the bottom in the market, just a bounce, right? Who knows what happens with the economy and blah, blah, blah. So just what are the signals that you're looking for saying, okay, I think this move may be kind of, dead cat bouncing at least?
Well, I think your timing is pretty darn good then, because it's probably something like today. I'm looking at the volumes and the pricing within the VIX complex. So to give you some background, I wasn't planning on bragging on my P&L because it's
Please
not that
do.
big of a deal. But so I bought VIX calls, out of the money VIX calls, the April 25s, April 30s. I sold them yesterday. My day trades were terrible. I bought them back at the end of the day, and that's frankly what's carrying most of the P&L. And that in the conjunction with the fact that our signals went risk off well ahead of time, so that was no problem. But the reverse of that is, if you start to see, rates start to change, oil is down, 9% or whatever. But if you see the VIX complex starting to chill out, in other words, the percentage and the volume starting to come in within the VIX, you could maybe say that realized and implied are going to start to contract. At least that spread will start to contract. And that would
Mm.
probably be more of a tell than anything.
Yeah. So that syncs with what I was kind of saying this morning. I'm not saying that for to be self-aggrandizing, just saying that this is not so much about what specific level we hit in the S&P. It's about when vol just gets so extended. Like watching the vol market is the signal for the bottom here, not, hey, we hit this level. Other than 5,000, I think at 5,000, if we hit that, there would be some kind of bounce there because there's just unbelievably big positions. But at any rate, this here is our new gamma curve or GEX positioning in the VIX. So we're looking at where customers are positioned. And I kind of want to get this take. I know you haven't seen this before, so I'm throwing a mini curveball at you. But what we see here is dealers are short VIX calls largely up into this 35, kind of 40 area, where there's some indication that the market making community is long VIX calls into that 30 or 40 area. And the reason that was interesting to me, and I know you haven't seen this before, so feel free to take a pass or plead the fifth on this. It sort of gives me the impression that there's the market makers are short like the call spread. And so if they're long calls over this 39 to 40 area, that seemed to be where the VIX topped out a little bit here. Obviously, there's a lot of new trades taking place. Do you see a situation where there's a lot more positioning above, and that gives us the idea that there's more upside convexity that could be had based on current positioning, or does this kind of give you the impression that it's maxed out?
Oh, I mean, I'm part of that. Some of those positions are what I have on. And typically, if I'm long VIX, I'm almost never just long calls because, the Vega component is so punishing if you're wrong and it just eats money otherwise. So you're typically going to do something in a spread market. So if you take an opinion, say VIX is, floating around, 16, 17, 18, something like that, and you're long the, 25, 35 or 30, 40, if the VIX goes to 20, that makes tons of sense. And then the market making community, if in absence of other stuff, will have that on in reverse. So yeah, that's why you typically don't just see the VIX keep going absent, COVIDs or nuclear missiles or something like that. So I think that's right. And I think the hard part about this is people that do want to try to catch a bounce, which is really difficult to do. If you buy options, your options are probably going to get smoked. So I
Yeah.
wouldn't go out there and buy a bunch of calls because those calls you're going to be paying, 35 vol or whatever in index.
S&P
And
S&P
if they
calls, you
go,
mean, or equity calls?
yeah, I'm just using S&P as a proxy for
Yeah,
everything writ large, right?
yeah,
So it can be Qs, it can be Tesla, it doesn't
but not
matter.
VIX calls.
Um, Not yes, okay, fair enough. Not VIX calls. I would not go out there and just go out and buy a bunch of calls hoping to catch a bounce because you could be right. Market could bounce 1.5%, 2%, and your calls could be unchanged.
That's right. I know the trade I was thinking about that I was laughing a little bit is the Hugh Henry trade. It's called where when vol gets extreme enough, he brought up this idea: if you sell like a long dated out of the money put and use that to buy a whole bunch of calls, right? So you sort of have that funding component of if you think it's going to be a historic bounce in the market. Um,
Yeah, that's got Vega risk though. So if you, I'm not picking on the guy, I don't know him. But what you're
that
doing
was
in
a
there is
COVID
you're selling
call. This is from
Vega.
5 years ago too, so he didn't say that recently.
Right, but you're still going to be Vega negative on that because the Vega component of your near stuff is not going to be, it's not going to exceed the Vega component of your backdated stuff. So, from a margin standpoint, you could still get dinged on that.
And that on this topic is an interesting thing you said that because one of the things we were trying to tell people today is you may feel like you're buying a call, right, as a directional expression, right? I think the market will bounce here. You're actually not trading so
No,
much the delta there, right? You're trading the Vega because vol is so high. So like you
correct.
think you're playing
Yeah.
directionally, but you're actually, buying vol is what that is.
Yeah. Keeping spreads ratios, I wouldn't even do calendars because there's basis risk there, or just do the Delta One instrument, which is what I am doing. So I'm buying a little bit of deltas right here because I've honestly had the bullets to move. And I'm doing that in Delta One instruments. I'm not buying any vol. No
Now,
way.
do you think in this situation where we come up into the weekend, I was trying to make the argument that to sustain this level of volatility, implied volatility, we need the momentum of the market kind of continuing to crash or incremental worse news, that kind of thing. Um, what would kind of break the momentum here? Is the weekend enough, or do you think so many people are worried in this situation? They don't want to be short anything going into the weekend. So, that kind of like ugly Monday open is really in the cards, or do you think, there's a decent chance that cooler heads prevail today and that risk starts to come off? Or is this something that you're like, no way it resolves today because of the weekend and panic and maybe mid next week, things calm down?
There's a lot of embedded questions there. How did we get here? It's based on the rhetoric of the administration.
Yeah,
So if Trump were to soften his words, the idea that he says something that nobody was expecting, or the reverse of that same something, to me is equally likely. So if he comes out Sunday afternoon and says something like hey, we're going to party with Canada and Mexico, could the market catch a vicious bounce on Monday? Of course.
hmm,
But not to speculate on that. To go with the mechanical stuff that I think is a little bit more mathematically reliable. Um, I think that the vol will be sustained. I think that earnings season is coming up, and if you are a CEO, the whole idea of saying that our input costs are changing, how much we can pass it on from a wholesale to a retail level, is yet to be seen. So in other words, from an earnings call standpoint, it would be logical to more or less kitchen sink the whole, whatever there is negative. Yeah,
sure.
our stock's down 10%, but here it's all Trump's fault, and just blame it on the big bad
Right, right,
administration,
right.
and and just do it like that. So the idea that VIX goes back down to 18, 19, I don't see it. So if you want to be long some convexity, I would probably fund it with some out of the money VIX puts. Now that sounds like investment advice, which I can't do, but
Sure.
I'm just telling you that that's an idea that some people might have.
Yeah, and on that point, it's kind of one of the interesting ideas is that in 2022, right, we basically maintained 20 handle VIX for the entire year, right? And I think kind of to what you're saying is like the new kind of average vol is just higher now. Like we're just in a different regime now, and so maybe 40 goes back to 25, but it doesn't mean that we have to ever get back to that, or at least in the near term get down. And it generally takes a long time for that vol shock to totally revert, anyways. So I think what you're saying makes sense. And I think it was Nike who already reported some really horrible earnings about 2 weeks ago, and they already blame tariffs. So it's like you are right. I think there's this cover now where it's like kitchen sink
Yeah,
something is, and it's quite an interesting idea.
yeah, why not? But maintaining a VIX of say 25, just picking a number out of the air, that can be a difficult number because there's a lot of theta, associated with that. So as I'm saying, as a way to kind of sustain some of that convexity to the upside in volatility terms, and talking about VIX, I would just maybe consider looking at some out of the money puts. Something like the $1.80, 60-cent puts that are wingy that probably won't get murdered. And if they do get murdered, in other words, VIX crashes to say 15, the presumption would be there's another different part of your book that
Mm.
will sustain your P&L, and if that does happen.
That totally makes sense. One other thing I wanted to ask you about in this market, I know your time is very valuable here, so thank you. We put out this new tool called Compass, and the reason I bring this up is because it allows you to just plot out the relative prices of different implied vols, and this is all struck to last night's close. So the vol on this screen's gotten a little bit obviously heavier, but in this market, how do you think about? Hey, I want to express either upside or downside views, or instead of saying, all right, now is the time where I don't want to necessarily trade S&P, right? Instead, I need to go to trading something that is trading at a relatively lower vol or cheaper vol. And hopefully, I'm asking that question. Sort of, you know, getting into sort of the dispersion question, I guess, a little bit linked to that. But the idea being roughly, look, instead of buying spider calls because the implied vol is very high, maybe I'll go to something like, it doesn't make sense in this case, but utilities because the calls are cheaper, right? So, how do you think
Utilities is a
about
different case,
fishing
but
and utilities is a different thing, but just as a rough example, because it's so much cheaper on this chart. But how do you think about maybe sourcing long or short positions by looking at single stocks in this environment where the vol gets so blown out everywhere?
short answer, yeah, that's what we're doing. So we're not going to do it today. We'll probably wait till Monday just because of that uncertainty that you mentioned already. But I think single stock vol is a statistically just superior trade than index vol at this point. Now, the caveat that correlation is coming from a really low level in the Biden administration, and everything that's happening from a market standpoint is happening at a macro level. So correlation, our correlation metrics are a little different than what the SIBO puts out,
Sure.
whatever it's worth.
I'm sure.
Um, but I do think it's a time to kind of add to that. And again, probably we're going to look at that next week as opposed to today, because today it's a little bit too finger in the air. but we're coming from relatively low levels. The idea that implied correlation in a 3-month or a 6-month gets to 40, 50, I think that's completely reasonable. So, especially if, there's this, back and forth with, tariff wars really with the whole planet. So that's a very macro thing. And will that be sustained? Your guess is as good as Howard Lutnick's. I have no idea. Yeah.
The reason I brought the correlation chart up is I know your metrics are going to be more sophisticated there, but the interesting thing to me is that correlation, the SIBO correlation metric, was also sustained at this kind of 40 to 50 level, in 2022.
Yeah.
And so the things kind of line up with just like, look, we're going to just be trading at this relatively higher level of vol, and realized volatility is just going to be higher. I don't know. One of the things that was just interesting to me, and I know you don't necessarily trade rates, but any comment just
Oh, I
on the
do.
fact that oh, you do? I apologize, I didn't realize that.
Yeah.
Look,
Yeah, I
I
do.
mean, 10
By the
years
way,
getting.
that's not my smoke detector. That's trade stuff going off in the background. I think I can hear the beep, and you guys are probably like, "What is that guy doing?" But yeah, there's
You should get out
alerts
of your
going on
house.
back behind me. Yeah.
Yeah, I just want to bring this up because I thought the move was so interesting in this, and that the rates are coming down, right? And I think it adds to everything that's going on. That or maybe there's macro implications here, but when you see this type of huge move in the rate market, one of the things that throughout history is shown, I think, when VIX and vol gets really crazy, it's when the credit market starts to quake a little bit, right? And so when you look at
Yes.
this rate move lower, you can see all the rates here are just really plummeting. What is your sort of read on that, and do you have anything that we could really take away from this?
So the secondary part of my P&L today is HYG. We are short HYG via put spreads. HYG is a notoriously non-volatile thing, but HYG is really just high yield.
Wow.
You can see that. So it's not something that really does too much that often. But kind of on your chart, we timed that pretty well. So we bought a bunch of puts and put spreads, prior to today, because we knew that, if it was going to cascade, it would manifest in this product. So that was just something that we could do. And it's liquid enough where you can go out there and do some size if you like. So rates are absolutely an important part of all of this. Rates are the cousin of the equity price, right? What is the value of Brent? Well, Brent is the value of whatever cash he has at hand plus his ability to get credit. And so if you think about, okay, well, what's the Brent asset worth? Well, the Brent asset is worth the combination of his cash and his availability to credit. And if your availability to credit goes down, so does your equity price.
That makes sense. Do you think that this is as much about sort of a rotation into bonds now because the equity market's getting so weak, or do you think this is more of a response to actual rates and rate trading? So in other words, is this as much about people just flooding into the the flight to safety, or is it actually people sort of betting on changes in rates? If that question makes sense.
Number two, changes in rates. If you look at the ZQ futures, which is the Fed fund futures, and you look at the relative moves in the trajectory of Fed fund futures between a week ago to today into the future, in other words, looking into the fall, it's changed a lot. So it is a real move, and it is a real move that is manifesting in equities. So I don't think it's just like rank speculation, knee-jerk 60-40 moving things around. I think that the rate market is definitely moving, but definitely moving for logical macro reasons that aren't just going to reverse themselves on Monday morning.
That makes a lot of sense, and I think that's like one of the key takeaways here is vol's gotten really extended. The move is we've gotten crashy, and so a bounce doesn't mean D bounce, right? And I think that's kind of like the way that people should take about it. I think Goldman's note said that something this morning like the state of the world is changing every 15 minutes, and so I think that was like
Exactly.
I think that was a pretty poignant way to
Yeah,
like summarize
even the deltas that I'm buying now, which I guess are losers. A little bit. I'm up less, but each one of those little beeps is money flying out of my account. I'm not going to hold it. You know what I mean? So we're still going to have a very risk off, opinion coming into, Monday. So it's, the idea that we crashed under 2 or 3% on Monday or 10%, I have no idea. It's completely reasonable.
Yeah.
So we're not, going out there and getting long.
Yeah, and I think Powell comes up here sometime in the next few minutes, so that will just add to all of the confusion, I suppose, or maybe it'll clarify things. I don't know. So anyway, Noel, we've taken a lot of your time today. I know you're super busy, so I can't thank you enough. Can you tell everyone about your Twitter handle or how to get a hold of you, if in the way that you want, I should say?
Yeah, I try to have Twitter. It's at Noel Convex, and our website is convexam.com. We are a hedge fund, so I guess we're always looking for investors. But above and beyond that, that's about the best way to get a hold of me.
That's awesome. Thank you again so much for joining us. And I hit you up on short notice, so I can't thank you enough for taking a few minutes. I'm sure people really appreciate it. I mean, I could see them in the chat here that they really appreciate it. So thanks very
Cool.
much, and I hope the P&L keeps going your way.
Yeah. Well, good luck today, and next week it's gonna be busy.
Yeah, that's for sure. This is fun. I like it. This is way more fun than watching the paint dry, late last year.
Yeah. Exactly. Okay. Thanks, Ben.
See you. Thanks. Well, again, thanks to Noel. I hope everyone took some good thoughts away from that. That he's